Hello traders, Gary Wagner here, just about 12:30 in Honolulu, 6:30 in New York. It is Thursday, April the 12th, 2018, and this is the daily report for gold and silver. The market giveth and the market taketh away. We saw a complete 180-degree reversal today, with gold trading strongly lower, closing at $1339.30. That's a net decline of about $22. Silver at $16.46, losing about 21 cents, and a nominal move to the upside in the dollar index, up 24 points at 89.29. The key sell-off yesterday in the Dow Jones Industrial Average was made up today, with higher pricing amounting to 293 points, closing at 24,483, and a substantial upside move in Bitcoin futures, gaining about $800, with the CBOE closing at 78.10 and CME at 77.80. Yesterday, tweets by President Trump drove the market dramatically higher, saying that there would be an immediate retaliatory response against recent chemical weapon use by Syria, were toned down today. But it was the release of the Federal Reserve's FOMC minutes from the last month that took gold pricing from the highs at $13.69 and drove them down to a level of about $13.60. Still, gold did close higher in yesterday's trading, resulting in approximately a $10 gain on the day. But even that was short-lived when early morning tweets, as well as statements made by President Trump, indicated that he was backing off of his earlier tweets from yesterday about an immediate retaliatory response. That sent the market dramatically lower. It also affected U.S. equities, which were strongly higher, and gold declined by about $22.50 and is currently trading at $1337.50. Effectively, today's price decline has removed any of the gains achieved this week. We can see that on this weekly candlestick, which is currently a doji. The other thing that is evident when looking at a weekly chart is this high that was achieved yesterday is the first occurrence of gold's price point being above $1365 since June, July, and August of 2016. I believe that the factors that moved gold higher yesterday are still absolutely in play in the market, and more importantly, still unresolved. The fact of the matter is, Trump backed off on his timeline of a response, but did not change his tone about a response to Syria's action. What is different about this occurrence was yesterday's response by Russia that indicated that first they would shoot down any missiles that came into Syria, and more importantly, that they would retaliate against the point of origin that those missiles took off from. On a technical basis, the key area of support needs to be the 50-day moving average, which currently resides at 1331. However, traders, this is a fundamentally fueled rally as well as a fundamentally fueled sell-off. And the current crisis in Syria and response by the United States will certainly guide the future of gold pricing. Therefore, traders, we will maintain our current long position as well as our current stop placement. However, on any indication of imminent action by the United States into Syria, we will look to add to our current long position in gold. Although the percentage gain witnessed yesterday in silver was still under the percentage gain of gold, we did see silver pricing for the first time open above the 50-day moving average and trade just to the 200-day moving average. This is really the first occurrence where we had a closing price that actually matched the 200-day moving average. We can see that in prior occasions, highs flirted with that average. Therefore, we continue to remain neutral in terms of our silver forecast, but believe that any new surge in gold will see silver move above the 200-day moving average in tandem with a gold rally. Lastly, I do want to take a look at Bitcoin and Bitcoin futures. Futures closed up solidly higher, up $820 at $77.40. If you recall from our commentary over the last few days, we identified a simple bullish reversal pattern called a bullish harami. We then talked about the need for a confirming candle to occur on the following day to give that particular pattern some credence. We did not see that yesterday, although we had a higher close. It was a very, very small bodied candle with a very, very tight range. That all changed today when we have this tremendous upside surge, indicating that the bullish harami did in fact indicate a key reversal in the market, and that the lows achieved at approximately 6,400 would in fact hold. We now could see higher prices with our next level of real resistance not coming in till about $9,000 per coin, or about a $1,300 rise from current pricing. Traders, the factors that drove gold substantially higher have not ceased in terms of its permanence. They have simply been put on pause. The fact of the matter is there will probably be a response by the United States towards Syria. The key is that the Russian stance is a lot stronger than we have seen in previous threats of military action to one of Russia's allies. At the same time, the trade dispute in China has been put on pause, but there are still factors that could absolutely take that into a full-blown trade war. Until then, we could experience neutral or softening prices in the precious metals or safe haven assets, but at any moment, these factors could reemerge in the marketplace, moving gold back up to recent highs. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.